Howard, great to see you.
Nice to see you, Romaine.
You talk about these sea changes, two big ones, of course, that really marked your career. A lot of it having to do with sort of a recalculation and I guess a reassessment of what risk is and whether you should embrace it. Of course, a low interest rate environment that dominated for basically 4, almost 5 decades. And now you say we're basically in the middle of a third sea change. What is it?
Well, if you look at the period from the end of the global financial crisis, roughly '09, through the appearance of the pandemic, and then in the 20 and 21, we were, the Fed took extreme measures to save the economy. Mm-hmm. They worked. Very low interest rates, the lowest in history, 0 for much of that time, and quantitative easing, the buying of bonds, which puts liquidity into the economy. These things produced what I would call was an easy environment in the economy and the markets. We had the longest economic recovery in history. It was easy to make money.
Right.
We had low-cost capital. It was easy to make a profit. We had very few defaults and bankruptcy. It was easy to stay in business. It was easy to access capital. Everything was easy at that time. And in the last year, of course, with the appearance of the inflation and the increasing of rates to try to stamp out the inflation, things have gotten harder. I imagine people today saying, well, when are we going back to normal, like it was 5, 6, 7 years ago? And the important thing to know is that wasn't normal.
Right.
That was the easiest, the best of times.
Right.
And my own belief is we're not going back there. We're now in an environment of more normal circumstances, and we're going to roughly stay this way.
Well, do we go back? I mean, what do we go back to at all? Because when I sort of read that memo and I look at sea changes, it sounds like everything new is new. It's never really a reversion to where we were in the past.
Right. Well, that's what a sea change is. It's a complete transformation, not just a minor cyclical fluctuation. So, look, I think that the business world, the economic world, is not supposed to be easy. It's not supposed to be easy to make money.
Right.
Or, it's not supposed to be easy for companies with bad business models to stay in business, as it has been for the last 14 years.
Right.
So I think we go back to a period in which we have moderate interest rates, we have moderate availability of capital, we have a moderate default rate, and so forth, all of which will feel much less accommodative, I think, than the last 14 years.